This is the performance summary of week 9 of 2025, which was the week ending Feb 28th. So let's start by inputting the starting and ending balances. Starting balance was the one on Friday, Feb 21st, 31,560. And the ending balance was on Feb 28th. The balance on that day was 30,218. So not a very good week last week. I lost $1,300, which is a negative 4.25% return. And let's input the trades from the theoretical trade list here. And these are the 5 trades I did last week. So the theoretical P&L is down 4.38%, so it's pretty close to actual. And let's look at these one by one. The first trade was AVGO Broadcom. Lost 8.77% on that trade. So this strategy being a short-term buy the dip strategy, looked at this sell-off that Broadcom had in the recent weeks. So it bought here on the Monday and sold here. Okay, and the next trade is Goldman Sachs. We didn't lose that much, 1.77%. So we got in here and got out here. Next trade is Netflix, lost 2.72%. Same pattern here. Here's the dip that the system picked up on, and we lost a bit of money over the week. Third trade is Tesla. That was by far the worst trade of the week. We lost 13.5%. And one might ask, why has the system been buying Tesla a number of times in the recent weeks, despite it being in a seemingly long-term bearish trend? It peaked back in middle of December, and it's been going down pretty much steadily ever since, and the system keeps buying it. Well, it is a mean reversion system, so there will be this kind of action in certain stocks once in a while where it may be in a longer term bear move, but the system buys and loses several times in a row. But there is a safety valve built into the strategy where if a particular stock is like really bearish for a really long term, over the really long term, the safety valve kicks in and that stock becomes excluded from the tradable universe until such a time when the stock goes back above the safety switch. So the safety switch right now for Tesla is around $224, and right now it's trading at $292. So we're not that far from the safety switch being triggered. And so this safety switch exists for all the stocks that is in the tradable universe of the S&P 100. And it's not a static number. It can move up or down by a little bit. It's basically looking at historical price level, and that's the safety switch. So it will keep buying Tesla if it happens to be one of the worst performers in the S&P 100 until such a time as when the safety switch is breached. And in the back test of the strategy, that's actually built in. You can see in this back test here, this is the back test which is survivor bias adjusted. So It includes all the stocks in the S&P 100 over the history. So stuff like Enron and other companies that have gone bankrupt are in here. And the safety switch that I mentioned did kick in for those bankrupt companies and kept you out of there in the really wild periods towards the end of the life of the company. All right, so the next trade was, well, the last trade was Walmart. Here we actually made almost 5%. So here's the dip that the system picked up on, and we bought here on a Monday and sold here on the Friday. Okay, so now let's input the ending balance into the cumulative tab. So with the loss last week of $1,300, our cumulative profit since going live last June is now at $4,168, which means that we're up about 16% from inception. And graphically, this is what our equity curve looks like. And let's look at the longer term equity curve of the strategy, and this is what it looks like. This is the back test going back to 1994. Gray line is the S&P 500 benchmark, and the purple line is the system. And this is where we're at right now. So that's the performance review for week 9 of 2025. If you want to learn more about the strategy, please visit my website at returnstream.com. Link is below. Thank you.